Welcome back to our Accounting Journal Entries YouTube channel. In today's episode, we will simplify ASC 360, which stands for Property, Plant, and Equipment. ASC 360 provides guidance on the recognition, measurement, and reporting of property, plant, and equipment in financial statements. Let's dive in and demystify this important accounting standard. ASC 360 applies to tangible assets that are long-term in nature, used in operations, and not held for sale. These assets include land, buildings, machinery, vehicles, furniture, and equipment. The standard outlines the criteria for recognizing and measuring property, plant, and equipment, as well as the related disclosures in financial statements. When a company acquires or constructs a qualifying asset, ASC 360 requires recognition of the asset on the balance sheet. The asset is initially measured at cost, which includes all directly attributable costs necessary to bring the asset into its intended use. This may include purchase price, transportation costs, installation fees, and any other costs directly incurred to make the asset functional. After initial recognition, ASC 360 provides guidance on how to measure property, plant, and equipment in subsequent periods. The standard offers two options: cost model and revaluation model. Under the cost model, assets are carried at their historical cost, less accumulated depreciation, and any impairment losses. The revaluation model, on the other hand, allows companies to measure assets at fair value, which is determined based on market prices or independent appraisals. However, the revaluation model is used less frequently. Depreciation is a key concept in ASC 360. It represents the systematic allocation of the asset's cost over its estimated useful life. Companies must choose an appropriate depreciation method, such as straight line, accelerated, or units of production, based on the asset's expected pattern of consumption or wear and tear. The selected method should reflect the economic benefit provided by the asset to the company over its useful life. ASC 360 requires companies to test property, plant, and equipment for impairment whenever events or changes in circumstances indicate that their carrying amount may not be recoverable. If the carrying amount exceeds the recoverable amount, which is the higher of the asset's fair value less cost to sell or its value in use, an impairment loss must be recognized in the income statement. To provide transparency, ASC 360 mandates specific disclosures in the financial statements. These include the significant accounting policies related to property, plant, and equipment, the depreciation methods used, and any impairment losses recognized. Additionally, companies must disclose the carrying amount, accumulated depreciation, and the estimated useful lives of their major categories of assets. Now let's take a look at an example. Let's say a company called XYZ Manufacturing purchases a new piece of machinery for their production line. The machinery costs $100,000, and there are additional costs of $5,000 for transportation and $3,000 for installation. According to ASC 360, the initial recognition of the machinery should be recorded at its cost, which includes all directly attributable costs necessary to bring the asset into its intended use. The company records the machinery at its total cost of $108,000, which includes the purchase price, transportation costs, and installation fees. This amount is reported as an asset on the balance sheet. Now let's consider the subsequent measurement and depreciation. Assuming XYZ Manufacturing chooses the straight-line method and estimates the useful life of the machinery to be 10 years, with no residual value. Each year, XYZ Manufacturing would record depreciation expense for the machinery based on the following calculation. At the end of the first year, the journal entry to record the depreciation expense would be $10,800. The depreciation expense reduces the value of the machinery on the balance sheet and is accumulated in the accumulated depreciation machinery account. If at any point there are indicators of impairment, such as a significant decline in the machinery's market value or a change in its intended use, XYZ Manufacturing would need to perform an impairment test. If the carrying amount of the machinery exceeds its recoverable amount, an impairment loss would be recognized. That wraps up our simplified explanation of ASC 360, Property, Plant, and Equipment. We hope this overview has helped you understand the key concepts of recognizing, measuring, and reporting these tangible assets in financial statements.